Welcome to our UCLA Extension Department of Business, Management, and Legal Programs video lecture series on entrepreneurship, new venture formation, and strategic business plan development. The video you're about to watch is an introduction to how to set up and manage an accounting and bookkeeping system. I'm Harry Redinger, your instructor. There is a total of over 40 videos in this lecture series that integrates with our UCLA Extension online course management program, Canvas. Each video strives to be brief, but there is a bit of overlap with each of the videos to tie our curriculum together. Okay, let's get started. This video, the last video we watched was on setting up and understanding our financial statements. It was really accounting and bookkeeping 101. The focus of this video is actually putting it to work, actually setting up the files, the program, to give you a bird's eye view to go from concept to application. And we're going to do this by doing an introduction to what we refer to as the accounting cycle. It's what takes place throughout a year, and the closing of the books and adjusting for depreciation and other end of the year type transactions, and how to work with bookkeepers and accountants in this process. So it's important to understand the accounting cycle, the basic events that take place annually in managing your finances, because it's through this that we can take control of our lives. And I think that's the note to go to my next slide here, taking control of your financial life. And the picture here of this gentleman is Robert Kiyosaki, and he's kind of famous. He wrote the book Rich Dad, Poor Dad, which really goes into how most of us invest into debt, credit card debt, and where most entrepreneurs, moxie, clever entrepreneurs, make sure they're always investing into cash flows, not debt. So that's kind of a reminder of, and there's also a certain sense of peace of mind to be in control of your life financially. It can really wear on you when you've got a lot of debt and you don't know how you're going to pay minimum debt payments and that kind of stuff. So it's an essential part of living a healthy life, and that's a healthy financial life too. That mainly that you know where you are financially all the times and you're in control. You're not losing control. Before we get into how to set up accounting management systems, I want to go through the accounting cycle. And this is a little, pretty simple diagram here. So the first thing in this accounting cycle is the transactions and event. This is the actual, purchase, writing of a check, or purchasing something with a credit card. But there's a transaction. You just bought something, or you received money. Something financially happened. So the next step is that that transaction, the documentation, the receipt, winds up in what we call books of original entry. So whether it's a handwritten journal or whether it goes into an iPhone and transferred into Quicken QuickBooks, and there's ways that your credit card statements can be automatically downloaded into Quicken QuickBooks. But this is where it actually gets entered into the accounting program. Then from there, we generate ledgers. And ledgers are general ledger chart of accounts. So it's a printout of the accounting equation. And this is where you can kind of see our balances. How much was debalanced in revenue, and which revenue accounts, and what's the direct cost of sales accounts, and then what's the total direct cost of sales, what's our overhead accounts, and then when we put all these transactions in, we then generate a report that's called a trial balance. And the trial balance is just to make sure that assets equal debits equal credits. Make sure that that the double entry system is correct. But another thing that takes place here is we're also looking for numbers that just don't make sense. So sometimes checks get posted to the wrong account. Revenues can get posted to the wrong account. Some things get posted as an expense when they should have been posted as an asset. And so there's a bit of reviewing all the transactions to make sure that everything's correct. And there's usually, and this is what brings us to our next step, is there's usually adjusting entries where we move things, certain transactions from one account to another. We balance things out so that it's more realistic or more appropriately, this is probably the right way to say it, more appropriately posted to the general ledger chart of accounts or the accounting equation. And then the next thing we do is an adjusted trial balance. Now we generate a report, and again, we take a look at now do all the balances look correct? Is everything ready to go? Are we getting closer to being able to generate our actual year-end financial statements? And then once that's all checked out, and if it's not, we go back and do adjustments until we get that just right. Now we generate our year-end final financial statements, and this is where we take key information and it gets transferred into income tax return forms. These are the reports we generate for income tax forms for federal, state, personal, corporate, but now we generate the reports for income tax. Once that's done, we now do what are called closing entries, where we take all the income statement accounts and they get closed to our retained earnings. So all the income accounts are now zero. For revenue, direct cost of sales, and overhead are all now zeroed out, ready to start the new fiscal year. Then we do a closing balance to make sure everything looks ready to go to start off and running for the next fiscal year, and now we've completed the accounting cycle. Part of all that cycle too is taking all the financial vendor file type information and we remove it from our file cabinet and the folders, and we stuff it in a banker box, because we have to hang on to that for like 5 years in case we get audited. And so part of this process from a paper standpoint is we also physically take out our vendor files and then put the folders that are usually alphabetically distributed, and then put them in a banker's box and then write the year on it, and we stick it in storage. And then at the end of every fiscal year, we go and look for the box that's 5 years old, and we get it destroyed. There's a funny saying at the end of every fiscal year, at the end of every accounting season, tax season, accountants celebrate that it's over. And it's not so much that they're done with all the work. It's another year is now closed and can't be, records can't be retrieved and audited. Okay, so we're now going to take an overview of the basic steps for setting up an accounting and bookkeeping program for your business. And it's pretty simple, but if you've never done this before, it's kind of like, where in the heck do I start? It's you got a program, you got records, and and how do you do this? So the first step is we have to set up our general ledger chart of accounts, and if we have no experience there. And just to refresh your memory, here's the accounting equation. So we have to design a set of general ledger accounts. I'm going to go to assets minus liabilities equal equity plus income today, revenue minus direct cost of sales minus overhead. And now we've got to set up and identify our general ledger. Our general ledger chart of accounts. We have to identify all of our asset accounts, liability accounts, etc. Now, Quicken QuickBooks, as well as most accounting programs, they ask you questions as you set up. Like it'll ask you, what kind of business are you? What form of inventory system do you use, etc. And you might need the assistance of an accountant or bookkeeper. And my God, it would be money well spent in advance to have a bookkeeper help you do this, to sit down and do this with you, or a CPA, depending on how big and personal relationship you have with your CPA. But to work with a CPA or an accountant in setting up this stuff. But when you open up Quicken QuickBooks for the first time, it asks you what kind of business, and then it generates a recommended general ledger chart of accounts. Now you go in and edit it and can fine tune it, but again, depending on how much experience you may or may not have, it might really behoove you to work with a bookkeeper or a CPA in editing and adjusting the recommended general ledger chart of accounts by Quicken QuickBooks, just so that so it's, well, let's put it this way, so that you fully understand how to interact. So when you have to post a transaction to an account, you know the difference between an asset account and an expense account and or overhead account. That's pretty important, and so that kind of coaching at this particular stage is essential, because if you go at a whole fiscal year and you post a bunch of transactions to the wrong accounts, you're just creating a knot for a bookkeeper or that you're paying an hourly fee for at the end of the year to untangle. So if you know what you're doing before you get into it, you could save just a humongous amount of unnecessary bookkeeper fees and accountant fees in untangling this stuff. But your end objective is to come up with a general ledger chart of account, a list of asset accounts, liability accounts, equity accounts, revenue accounts, direct cost of sales, and overhead accounts. Also, another thing from the standpoint of managerial accounting, you can work with your CPA and your bookkeeper to find out what types of financial information would benefit you the most throughout the year to know. So when you generate reports, those reports are going to be reflections of the accounts you set up. So depending on how you combine or separate certain types of expenses and revenues out, could make a big difference on how this information is interpreted and used. So if you can figure out how you're going to use this information throughout the year, it could be very, very beneficial throughout the year to know this information at any time on where you stand from a cash flow standpoint, or having specific information that tells you how you're doing with profit center revenue accounts, and or just say profit center accounts, where we combine revenue and direct cost of sales and see which of our profit centers are making those money. Because you can't really know if something's making money unless you take the revenue deposited in that account minus the direct cost of sales of that account and see what the balance is. Because it's possible you could have, profit center accounts that are running a negative. The amount of money that the revenue you get out of it is a lot less than the amount of direct cost of sales that you put into it. That would be pretty important information to know. The second step is accounting program training. So if you're already up and running on a program, fabulous. But in most cases, from a startup business standpoint, you want to acquire an accounting program, and most likely it'll be Quicken QuickBooks. It's kind of like the 800-pound gorilla, the category killer for accounting programs, and most CPAs know how to work with it. And there's lots, oodles and goodles of training programs, from DVD to extension programs, junior college programs. It's not hard to get basic training in Quicken QuickBooks. From basic to advanced training, and so the basic knowledge to how to interface, how it's set up, how to enter checks, how to enter credit cards, how to set up for cash flow projections. So there's a lot of really cool things that Quicken QuickBooks can do, but you got to know how to set it up. And so having the training on how to set it up for putting cash flow in, then you can have reports that'll give projected cash flow versus actual cash flow throughout the year. Financial management empowerment. In this slide here, just wants to profile all the training programs in the marketplace. And I think that even though most of us who are entrepreneurs are always busy all the time, we really don't have a lot of spare time. And where are we going to find the time to take a class or to have training? Just know that whatever you have to invest in a learning curve to master the basic applications of entries in QuickBooks will pay off exponentially down the road. Because know that 70%, I forget what it is, 70 or 80%, but it's a huge percentage of the reason for most businesses failing is a lack of financial knowledge, a lack of understanding what's going on. And the more you do this, the better you'll understand how to project cash flow projections and just where you're at financially. So as things happen throughout the day, without even looking at the computer, you kind of know what the impact of that's going to be on your books. This is one of my favorite classroom slides relevant to financial management. I know this is going to sound a little crazy, but there's times where there's just a flood of receipts and financial information coming at you, bank statements and bills and receipts and tax returns and invoices and expenses and budgets and. So relevant to getting bills and checks and deposits and this information, if you ever seen it, this is a wood chipper, and so people who trim trees put the branches of the trees in one side, and wood chips fall out, shoot into the truck on the other end, and so the red wood chipping machine is your QuickBooks. So you're throwing in financial transactions in one end and it's spitting them out into the proper categories on the other end. So if it's set up correctly, because you can set this up so you can electronically download bank statements, credit card statements, and it automatically goes into the appropriate accounts, because technology has gotten to the point where you can integrate electronically downloaded bank statement with deposits and checks and check numbers and all that kind of stuff, checks that have cleared, as well as credit card statements downloaded, and QuickBooks is set up to take that downloaded statement, because they've coordinated what they do with bank financials, and just automatically into all the appropriate accounts, which is symbolic of just throwing these statements inside one end of the chip, and it goes into the appropriate accounts. I know it's quite a creative way to look at it, a financial management system, but there's so much of it coming at you all the time that and in the short run, when you're trying to get a business going off the ground, you have to make time for it, and it can take an awful lot of time. You might have to allocate a half a day, a week sometimes just to do it before you have enough money to hire someone to do it. But it won't be long before you'll absolutely have to have on board someone who does bookkeeping and accounting, just like at some point you're going to have someone full-time that just manages human resource management in terms of making sure all the forms are filed and that you're compliance with state and federal employment laws and things of that sort. This next slide here, I just want to promote UCLA has one of the best in the nation. I want to emphasize this: best in the nation accounting, bookkeeping, and accounting programs. So if you want to become a certified financial manager or pass the CPA exam, UCLA Extension has courses for all that. So in the world of human resource management and accounting, UCLA Extension is one of the national leaders in excellence in training people from basic bookkeeping to basic human resources to being a senior human resource manager or a senior financial manager. Just be aware of that. Anyway, I highlighted a UCLA course here called Accounting Using QuickBooks. So it's just how to turn on and how to put the stuff in it. And so just that class, or this might be overkill, but or going through and becoming a certified, certificate program in finance, accounting, and bookkeeping. They have these programs, or hiring an employee and paying for their tuition and guiding them through that program. having a chief financial officer or someone that grows with you from a chief financial officer standpoint is an essential part of any organizational structure. The third step in setting up and managing an accounting system is your computer system setup and data entry. So now that you've got the general ledger set up, now that you've gone through a training program, now it's this very detailed, and it's painstaking. It's a process of entering all these receipts into the system and checks. And so this is one of the reasons why when you just start up, the last thing on your mind when you're just starting a business is tax returns. And if you go a full fiscal year and you're not tracking any of this stuff, you've got a mountain of work to do in order to do a tax return. So the sooner you get this set up and get this information in the computer, it's a whole lot less crisis management painful at the end of the year. And most people starting a business are just not even aware of this. And because you're not aware of it, that at the end of the year, and if you have any other financial problems at the end of the year, can be absolutely catastrophic. Because now, you've got tax problems, you've got the IRS after you, you're paying penalties, things can snowball out of control. So when you start a business, whether it's sole proprietorship or a corporation, there's no avoiding the need for financial management. It's absolutely essential. And if you don't do it and get surprised with the reality that it needs and has to be done, it can, in some cases, be the kiss of death at the end. Because if you're just worn out emotionally from all that you're going through as a business and realize I've got 10 or 12 months of financial stuff that has to get into QuickBooks, and it's just, it's a box of receipts like that. And then even though you can download bank statements and credit card statements and it goes right in, but if you don't know how to do that, there's a learning curve to do that competently. So, you're not creating a bigger problem. So, take to heart the need to set up these systems and as soon as you possibly can, even if it's just a few transactions and a few checks and credit cards, start getting this stuff into an electronic, a QuickBooks or some kind of accounting system as soon as you possibly can to avert a crisis management situation at the end of the fiscal year. The fourth step is financial reports and CPA adjustments. So after you get all this information in, you want to set up a meeting with a CPA or a bookkeeper to have them take a look. This is basically the trial balance kind of stuff before the fiscal year is over. Just to say, does the size of these numbers and the coding of these accounts make sense? Is there something that is an expense that should have been a liability or vice versa? The titles of the accounts, because you can create a general ledger chart of accounts, but they're really not going to mean anything until you start getting the numbers in. And when you get the numbers in, and with someone who's experienced at the size of these numbers per your industry. And also, these people know how to help you avoid being audited by the IRS. So the IRS looks for ratios. They look for, that number looks funny. Well, we better fill out the form and send it in and call you into the office for an audit. Well, no one wants to go through that. And so having a CPA or bookkeeper work with you, so when the tax return comes in and these tax forms are filled out, it looks normal. It looks like, generally accepted accounting procedures for you and your industry make sense. So fourth is to have experienced, certified, qualified eyeballs look at your financial statements and make those basic adjustments, as well as give you whatever additional training you need so that all future transactions are winding up in the right place. Again, this slide is relevant to getting the input of a CPA. I like the one up here where there's a doctor and he's got the stethoscope because as a business, you absolutely have to have a relationship with a CPA, because if you get a letter from the IRS, it's just a lot of stress, and just even understanding what they want And don't try to respond to yourself. This is what CPAs are for. Regardless what it costs, you do not want to respond to the IRS yourself. You don't want to talk to the IRS. You have to have a CPA do this for you. Even if you got to get a credit card out to hire the CPA, just like you don't respond to a lawsuit yourself, you hire an attorney to do that. It's just idiotic. It's just not a very smart move. So in this particular case, you want to have a CPA, just like a doctor does a physical on you, that if you've been working with a CPA throughout the year, they know your vital signs. They know your business. They know your expenses, your income, etc. And they're in a great position to respond to the IRS. In most cases, they fill out a little form or write a letter or get a form, check a box, a minute, it's done. Where as far as you're concerned, you might have thought you would have like additional taxes of thousands of dollars, or that this is going to put you out of business, or you're going to go to criminal court or something like that. So it's important to have a CPA because they can take the stress out of any kind of IRS correspondence. Okay, the final part of setting up your books is setting up your vendor files, the paper stuff. All the digital stuff can be backed up onto a disk and filed in with it in terms of backup files from QuickBooks or whatever accounting program you have. But here's where we actually have to have, file cabinets that we put, our vendor information. Know that if you're a sole proprietorship or a corporation, but whatever business entity you have, you want to have a vendor files for your business stuff and then another set of files for your household gas bill, electric bill, telephone bill, and keep these separate. So you want your business general ledger chart of account or vendor files, and you want your household financial system, and keep them separate. Whether you're a corporation, but just always keep the personal and business separate. It's just cleaner that way. And it makes it a lot easier to know what documents are being destroyed or whatever. But as best as you can, keep the stuff separate. And then at the end of the year, you have to hang on to, I think, for federal documents, I think it's 5 years that you have to keep your documents at the end of 5 years. You can take this box to, one of these document shredder companies, and they got these big machines to just grind it up into, pulverize it. So no one can, get your tax numbers and Social Security numbers and all that kind of stuff. Anyway, to wrap things up, you want to go into business with a sense of financial control. And so taking control of your financial life with an accounting system is the first step. The rest is to manage your cash flow and debt and all those kinds of stuff. So that concludes our talk on how to set up an accounting and bookkeeping system. And I hope you found that useful. And we'll see you at our next video lecture.